Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 14th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The first thing to notice here is that this melt-up phase continues to remain firmly intact. Ever since that major rejection that Thursday a few weeks ago, we've seen a steady continuation to the upside. A melt-up phase, as we have not seen any pullbacks. We have not seen price really trade to the previous session's low at all, except for the previous session here. We have not even really seen price trade in the lower half of the previous day's range for much before it's continued higher. Most of the time it's been pushing higher, holding at highs within narrow ranges and continuing from there. But one thing to keep in mind about a melt-up phase is that sometimes it can precede a broader pullback. Think something like this here before finally it pulls back. Or if you kind of go back in time a little bit more here, something more like this right here, or like this right here, where you're really melting up, and then bang, you get hit with that big pullback. We're not seeing signs right now that a pullback is imminent, but at the same time, whenever it does happen, it could be a huge day. That's 200% of ADR. Right now, look at this tiny range here that we're developing here. This is just 9.25 points of range. That's 27% of ADR. The ES is now trading just 33.9 points per day. And if you just go back about a month ago, the range was 92 points per day on average. So this is a significant drop in volatility. And at some point, whenever we do see rejection, we may see a pullback that takes us as deep as 39.76. And again, that zone could provide another opportunity for rejection and then a bounce back up toward 41.50. Alright, let's take a look here at the NQ. Now, in terms of the NQ, you'll notice that this one had that compression that we talked about here before. I mentioned before that 13,000, if it can push through 13,000 here, it opens up 13.9 with a shot to go to 15K. Right there, that's 13.9. That's the previous high. It's the key range high. We've just made the entire key range from the key range low to the mid to the high, and now we're trading above 14K. So we have just hit 14K. So from 13K, we have hit the targets here. We've already gone halfway to that 15K target. 15,073 is the upside target here, and that's the next major target to reach, or the last major target to reach. The next one is 14,487. So again, there's a couple of ways this can go based off of how significant this range was right here. The idea is that we likely continue toward that 15K target. However, keep in mind this key high right there, that key range high, that's going to be an important level. If price rejects that high, we could back and fill for a bit here before it's ready to go. So again, if we can't hold above 13.9, that would be an early indication of perhaps a pullback. That pullback could provide at least one pullback opportunity to go higher, or again, as I mentioned, go sideways before it goes higher. So right now, again, very, very strong market here. Melt up phase, very similar to the ES. More upside likely ahead, but if we get a pullback, how deep will it be? And if there's a strong enough rejection, that could provide a path for a push toward 15K. Alright, let's take a look now at crude oil. So crude oil finally getting a move here to the upside out of that short-term range. Not the most significant push out of that range, but it's still above 60.75, which was kind of the top end of that narrow range after it adjusted itself. The upper end of this range here takes you into about 62s. So this is the day it transitioned below 63 and 62. One day it tested prices above 62 and then dropped hard. Next day it tested prices above, or the next week rather, tested prices above 62 and dropped hard. So now we're coming back into that zone. That's another point from now. So if prices can rally another point here, that would actually put today right at around the average daily range. So it could easily get to 62 and be basically at or just below average, which is 2.06 points per day. Right now, the CL is trading a range of 93 ticks. So overall, the flow is to the upside with a shot at testing 62s. That's the key range, the key level to watch though for this range, because if it can transition through 62 and especially 63 here, it opens up a return back toward highs. If it gets up to 62 and we see an even more pronounced rejection, we may be looking at a break to the downside. Ultimately, what we're looking for is expansion out of this range, which is very, very narrow and packs a ton of energy. So whichever way this one goes could provide the next major move for this market. All right, let's take a look lastly at gold futures. In the previous session, I mentioned that we needed a higher low, or a previous couple of sessions I mentioned if we can get a higher low here, a good one, a failed new low to boot, that could provide enough juice to get this thing going to the upside. Yesterday, that happened. I don't know if it quite closed right at an outside high, but there was a pretty decent rejection off that low, pretty decent continuation to the upside. And now we have another narrow range here. GC trading just 9.6 points for the day. Very narrow compression phase that began basically yesterday afternoon. For the most part, higher low right here opens the door to potentially pushing higher again above 1765, opens up 1875. And the last thing here, all of these markets right now have very narrow ranges. GC trading 40% of ADR, ES 27%, NQ 38%, and CL at 45%. We do have Fed Chair Powell speaking at 11 a.m. Central today, Beige Book later on this afternoon, and several FOMC members speaking later on in the afternoon. But Fed Chair Powell coming up pretty soon, so we could be looking at some range-bound price action ahead of that speaking engagement. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I will see you in the trading room. Take care.